We're joined by Oliver Slope, and he's with Blue Line Futures in Chicago. So interesting trade going on here to start out the week. We still can't get anything behind the wheat market the way it seems, but the soybean trade and the nearby corn are really taking off here today. Now, in both cases, the nearbys are leading the charge. What does that mean?
Well, I think it means that we probably got a little bit overextended last week, and we talked about that last week, Thursday afternoon when I was on with Scott talking about a lot of times you get these big downward moves and they happen in days of 3 and 4, and a lot of that is margin departments and risk departments stepping in at the tail end of it and forcing people to square up positions, especially ahead of a weekend, which we saw. So I think now we're at the point where we can start to recover some of the losses from last week and gain some ground back. Now, does that mean the longer term bottom is in? I don't think so, but I do think that we can enter into a little bit of a holding pattern and start to consolidate from these levels. Big levels were tested and held in the soybean complex. 13 to 13.10 were the lows from last July. So that was significant that we were able to hold that resistance. Thursday and Friday's highs, 13.45, 13.48 is going to be the big hurdle. If we get out above there, maybe we spark a little bit more technical buying and get us closer to that $14 handle. But as I'd mentioned, I think a holding pattern and consolidation is probably the likely scenario for these markets. Now, the wheat market obviously struggling to play catch up with the corn and beans, which I'm just a little bit mind boggled of. I think there's a lot of good reasons to be long wheat here, but currently as it stands, long and wrong.
What did the latest Commitment of Traders report show Friday afternoon?
Well, the Commitment of Traders report showed funds still about just shy of 100,000 contracts short of corn. Soybeans, it was their smallest net long position since 2021. I think it's long about 24,000 contracts. So the funds obviously have room to add, but they don't really have a good reason to at this point. Planting pace is ahead of the 5-year average. Weather has been pretty darn good. And demand has been dismal. But as I'd mentioned, a lot of that bad news is likely known and priced into the market. So I don't know that they're going to press this much further right now until we get new news across the headlines.
How were they positioned in the wheat then? Do you remember?
The wheat market, they're still heavily short about 112,000 contracts, which has kind of been my catalyst for the last month or so, is that we're going to see some sort of short covering rally. And I think there's been a lot of opportunity and reasons for shorts to cover, but they obviously haven't yet. But all it takes is one thing to spark that short covering rally, and then you get a big rush for the exits. Obviously, that's not something that has played out, but when it does happen, it could happen really quickly. The volume and trade activity in the wheat markets is a lot less than corn and beans, so it's a lot narrower of an exit door. And looking at the options market, it's a great strategy or way to get some exposure with limited risk when you're playing for a counter trend move like we are in wheat.
A quick look at the U.S. dollar index right now. We'll see what it's doing here to start out the week. And, well, on the dollar value, we're about 61 points higher, pretty flat at 103.140 on the June futures. We'll come back in a moment, and we'll take a look at our livestock trade right after these messages.